Welcome, everybody. Today we'll be doing a trade review and a little market breakdown. So basically, we're just going to talk about why I took the trade I took, and we're going to do a little review of the market for the week, right? I'm just going to teach you guys a little bit about how I trade, why I trade on certain days, why I avoid certain days, right? So first off, let's just go over the trade I took this morning. So this trade was based on the bounce of a demand zone, right, which was the open of the New York session. You guys can see right here at 8 a.m. we opened up right here, and then I took this trade off of the bounce. And I actually sent my full game plan for futures to my premium group. So I literally sent them a screenshot of my chart and I said, this is what I'm doing. And I just executed that. My trades are super short. This trade was like 3 minutes, right? So I just send them a game plan beforehand on exactly what I'm looking at. So they have that mindset, they have that strategy on why I'm doing what I'm doing. And so let's look at why I took this trade, right? So this is the 15-minute time frame. So it was a 15-minute zone, right? This is how I marked out the zone. I took the body of this candle at 8 a.m. Eastern time, which was the open of New York session. So let's go a little deeper into why I took this trade and where I placed my entry. So I placed my entry right at the top of this zone, and this was a scalp trade, right? So this was a scalp trade. So all I was looking for was for failure to close in this zone, right? Because this was a demand zone, so there's a lot of buy orders. So if price did not bounce or did not fall through this zone, I took a buy order. Simple as that. And I had my stop right below this zone because a lot of times price will come down and like stop people out right here. Like I didn't take any of these trades. I could have, but I just avoided it. So I took this trade, right? I entered right off this bounce. So you can see we open right here. We come down, we bounce, and I place my entry right here. And I was in for about a 1 to 2.5 risk to reward, probably about 1 to 3. I had my stop a little bit tighter. It's probably right under this body, so like this. It's probably about a 1 to 3 risk to reward. And it was a nice trade. It was a nice trade. It was a short trade, right? Like not short as in selling it. It was just 1 to 3 minutes, right? So it was actually probably something more like this. And let's even go down on the 1 minute just so you guys can really see like how this move worked, right? So you can see that price was bouncing on this zone, and my job was just to say, okay, what are the two probabilities that price can do? Because as a trader, we look at probabilities. So the first probability was that price breaks through the zone. So I would think price would break through the zone if it had something like we have here, right? Like a strong hard close and then a rejection above it, right? So we didn't have any of that, right? We did not close anywhere near anywhere in the zone. We just closed above the zone. You can see we had no candles that were beneath it, right? All these candles were like hovering on it. These are 1 minute candles, so that says a lot. So that's told me that this zone is pretty strong, right? Nobody's willing to sell for below $18,435 in this case, right? So knowing that, I say, what are the two possibilities? The first one is it breaks through. That didn't seem that likely to me. So I took the second probability was that we bounce above, right? And that was right. But I was prepared for things to go wrong, right? Because if things were to go wrong, I had my stop right here. I'd get out right here for a small loss. I would have probably lost around like $500 to $800, depending on when exactly I got out. But I got out for around $3,200 was my profit after fees, right? And then obviously like after taxes, it's a little bit less, but it's a nice trade, right? It's a nice trade, and the reason I like this trade so much is because it was a simple trade. It was a nice, clean trade, and it's like 40 points. And it was simple, right? Because we had a very choppy day today. So I just took that trade and I didn't enter anything else at all. I took some other options trades in the morning with my premium group. But as far as NASDAQ goes, I didn't enter any other trades. Or as far as ES goes, I didn't enter any other trades. And like, let's look at some trades that I could have entered. I know I hate using the word could have in trading, but I just want to teach you guys. I just want to have this be a learning experience. So I could have actually, that's a beautiful trade. Beautiful, beautiful trade. All right, so I'm gonna quiz you guys. Why is this a beautiful trade? Right? And if you answered because we rejected off of a high and we did not show any single signs of closing above the previous high, you would be correct. Right? So you guys can see that, this is a beautiful trade. So I would have taken it like this. I would have targeted this. Maybe I would have targeted the Asia lows. Actually, I probably would have. That would have been more of like a swing position. But And like this just goes to show you, like there's always opportunity in the market. I could have took this trade and made a lot of money, but I just I was I had other things to do today, right? I was recording some content for my premium group. I was helping one of my students out that I mentor, right? So I just didn't really have the time to take this trade. And I also didn't have the mental energy to enter the market again because it was very choppy, right? So I was just like, okay, I'm out. I'm good for the day. And that's what happens. As traders, I think that a lot of times people get things mixed up. They think that we catch every single move. This is not true, right? We catch some moves, but we do not catch every single move. So I cut that move, and this would have been a nice trade. I would have had my stop right above here, and I would have looked for failure to close above this high, right? So like anytime price came up here, I would have got out. But if we failed to close above this high, and then we closed hard closed right here, this would have been a safer place to take the trade actually, because you see we hard closed right here, showing that we're actually under the zone, and then we started coming down, or even like right here, because you have the two candle confirmation, right? One candle something, one candle, two candle should be your confirmation candle. So that would have been a decent place to take the trade. And I would have wanted to get out around this low right here. So like something like that. And let's go for a little bit, even a little bit more education. All right, I'm giving you guys a lot of free value. I just want you guys to understand what I'm looking at, understand what I'm doing, so you can apply it to your own chart, right? If you want to join my premium, that's available. If not, just enjoy the free stuff, right? So get the value that I give and learn it, practice this stuff. This stuff does not come easy. This stuff comes with lots of practice, right? So let's look right here. So what did we have? We had a Asia low, right? Asia low and Asia open, right? So that is an extra strong zone. So when you have a low and an open very close to each other, that means there's a lot of liquidity around it, right? So came down. There were a lot of buy orders here that didn't get filled. Buy orders got filled. We bounced up a little bit. Then we actually came up and rejected off of the London low, LL, London low. We rejected off of that. So that could have been another spot to take a trade. I'd probably put my entry right around on like a smaller time frame. I'd have my entry right around here, and I would have my stop loss above this previous bounce area. So that would have been a nice little short to take, right? But I mean, I just want you guys to see the strength of opens, highs, lows, and closes, right? So this was a open and a low, right? So very strong, right? This was a high, right? Great rejection. This was the open. This is where I took my trade off of. Very strong. And then even when we rejected to it, we rejected through it, it was also very strong, right? So that's what I'm looking at today. And one more thing, we actually had FOMC on. Oh, I got to show you all this. This is great. This is actually one of the whole reasons I made this video. Look how accurate my analysis was. And I'll actually post a picture of what I had it of where I had it before in the Discord. I'll post a picture before in the Discord. So I sent out a game plan to my premium members. I said, let's watch this low. Let's watch this 5180 level, right? What did we do? We bounced perfectly off of that. Perfectly. That is so beautiful. That is so beautiful. That is like when you wake up or you're at a nice restaurant and you've been out in the hot sun or you've been out in the cold and you have a nice fresh glass of water, right? A nice fresh glass of water. Or if you're somewhere where it snows, it's like having a nice cup of hot coffee or hot cocoa. Like it's just beautiful. It just feels right. Just one of the peak experiences of human life. Look at that. Look how accurate this was. And one of my members, one of my premium members, actually cut a trade off of that. I was so excited to see that because I didn't trade this, right? Like, I'm not going to be like, oh, I catch every move. I catch some very good moves, but I do not catch every move. But this was such a beautiful move. And the reason I didn't trade this was because we had FOMC. So basically, that's when the Federal Reserve sets the interest rates. And Federal Reserve, if you don't know, they pretty much control the whole policy for the American economy. So when they make decisions, it's very important. So look how perfectly we bounced off of this, right? So how would you have taken this trade? So I would have set a very, very tight stop. I literally marked this out right here because look, this is a double low, right? So we have Asia low, London low, and then we made a New York low. So that's three lows. But I called it out right here. I said, okay, we could tap this 5180 level. So like price was like, you couldn't even see that move yet. You just saw like this. So I said, let's look at this level. What did we do? Perfectly. So one of my members took this trade. Shout out, I believe his name is Matt Time FX on in my Discord, right? One of my premium members. Great guy, great guy. Learned super fast, really positive guy, and he's just learning and applying the concept. So I love to see that. And he uses my tagline. He's like, "That's what we do." When he hits a trade, he says, "That's what we do," because that's what we do. we hit nice trades, right? So I would have looked for something like this. So on FOMC, I would have knew we would have a big move, so I'd probably just put it up to 1% and then be like, all right, I'm at a 1%, and I would have my stop loss so damn tight because this could go so wrong just because it's FOMC. So I'd have my stop loss like right here, right? Like the second we reject this last previous zone of liquidity, like this kind of micro zone of liquidity, I would be like, I'm out, right? But this was such a perfect trade and we tapped it so beautifully. Why? Because it's a low, right? So I don't use support and resistance. I don't use any of that stuff. I use highs, lows, opens, and closes, and I mark out liquidity, and then I look at overall market structure. Market structure, we were ranging, we came down, we hit another equal low, and then we broke through the previous highs, signifying a break of structure. You also could have gotten off this, and that's just beautiful, right? Like this is literally so beautiful. Whatever, like your peak, like if I'm talking to you right now and you're like, there's something that I just really, if you're thinking this, you're thinking there's something that just feels right, right? Like maybe it's a certain food you have, maybe it's a certain TV show you watch, right? Maybe it's a certain person. That's how this feels for me. This just feels right. Like I love seeing this stuff because it lets me know that all of my years of looking on the charts, all of my years of trying, all of my years of failing, right, comes to work, right? It comes into play. It's important, right? And it pays off, right? Mostly it pays off in so many different ways. And one of those ways being I am just extremely accurate with this stuff, right? And it was not always like this. I was so confused when I first started out. It took me around 3 years to start seeing any profits in the market, right? When I first got into this stuff, I had no idea what any of this stuff meant. I was like, what's options trading? What's futures? I had no idea, right? But now I am where I am because I didn't stop. I never stopped. I would just tell myself the only way you lose is if you quit. The only way you lose is if you quit. If you don't quit, you don't lose, right? So I'll leave it at that. I hope everybody has a beautiful night. I hope everybody has a great rest of their week. I hope everybody stays safe. And I will talk to you all very soon, right? So RP out.